reason why the gold stocks had a terrible year, even though the gold price ended up over 1,800, was the fact that there was just no interest in this sector. Why should I buy risky gold stocks when my equities are going up in all these other sectors? But it's created this incredible opportunity right now for people who are cashed up and have patience and know how to pick these stocks.
Welcome to Inside the Markets, flagship podcast of the StockPulse.com. Join me today, David Erfle. He is the Junior Miner Junky to talk a little junior mining. So, David, appreciate you taking the time here. It's been a while. We'll certainly dig into junior mining. Before we do, maybe let's get into the playing conditions. How's the setup here looking for the precious metal sector?
Sure, Rob. Yeah, it's really interesting right now. First of all, we came into last year on a really high note. We had a lot of people still on the bullish side of the boat after the gold price peaked over $2,000 an ounce in August. And the first week of the year, we had a huge surge and then a strong reversal. And then it never looked back on the bear side all the way down into the end of the year. Well, this year, it's kind of started off on the same way, only the opposite. We had a big, huge down day to begin the week last week, and we've had a strong reversal now to the upside. And the climate is really reminds me of the first few weeks of 2016. And the first few weeks of 2016 were basically the end of a very long bear market in the sector. You know, the sector the GDX had gone down like 85% in 4 years into the end of 2015. And to set the scenario where it's kind of similar to that time period is in September of 2015, the miners began to bottom. It began to make an accumulative bottom into the Federal Reserve meeting, where they shifted monetary policy to tightening, where they had the first rate hike, right? And the gold price bottomed at 1045 on a few days after that. That was the bell for the bottom. And but the miners continued to trade sideways. And the first 2 weeks of January, they were being sold. There was really low volume. There was just no interest. You know, it was just apathy, like we have right now. And then all of a sudden, after the flat bottom that was being created for 6 months in the GDX and GDXJ, we had a sharp move down, and all the bears loaded up on the bear side of the boat, and there was a strong reversal to the upside. Caught everybody off guard, whipsawed them out of position, and the sector never looked back. The GDXJ went up like 200% in 6 months. Now, I'm not saying that's going to happen again now, but the climate is very similar to that climate back in the first few weeks of 2016, because the middle of this past December, we had the Federal Reserve announce a major shift in monetary policy. They started to taper their bond buying program, and also to start jawboning about raising interest rates. Well, now the market is priced in an 80% chance of the Fed raising interest rates at least 3 times, possibly 4 times this year. So pretty much, I think all that's priced in, and the shares and gold is starting to act like that. So, and if you take a look at the GDX and GDXJ this week, we started off the week with a very bullish technical pattern. I know it's only on the daily, and I know it's on low volume, but we see 3 white soldier candlesticks on the charts of GDX, GDXJ, SIL, and SILJ, the silver ETFs. If we see that on a weekly basis, the next few weeks with rising volume, that'll be extremely bullish going into the year.
Yeah, let's get into the Fed here. They've telegraphed they're going to get aggressive, possibly 4 rate hikes, at least 3 certainly. How do you see this? Is this something that will happen, and how will that affect things?
Yes, I think you're going to see interest rate hikes. I mean, they're over a barrel. I mean, look at the CPI today. It's up 7% now, year over year, highest inflation in 40 years. They have to raise rates, and the market is absorbing it, and it's not crashing. The market is still in buy the dip mentality. That's another thing that needs to take place for this sector to get really bullish, is the stock market needs to roll over. I mean, a big reason why the gold stocks had a terrible year, even though the gold price ended up over 1,800, was the fact that there was just no interest in this sector. Why should I buy risky gold stocks when my equities are going up in all these other sectors? But it's created this incredible opportunity right now for people who are cashed up and have patience and know how to pick these stocks. Because let's face it, most of these juniors are garbage. So you have to really know which ones to pick, because about 90% of them aren't worth investing in.
Yeah, we'll certainly dig into the juniors here in a minute and get into that sector. Before we do, though, inflation will be a big driver, obviously, for those companies in gold. So I heard the term transitory. I thought that to be quite the amusing term. How do you see inflation playing a role here moving forward?
Yeah, I think that phrase has been put to bed, and
Yeah.
the Fed is, and that's the reason why gold is hanging on here, even though the Powell in front of Congress was saying, look, we messed up on inflation, and we're going to have to raise rates. We got to take all this liquidity out of the system, and the last few rate hike cycles in this country, the gold price has gone up quite a bit. In the rate hike cycle of 2005 to 2008, went up 35. The gold price went up 35%, and it went up went up 70%, and it went up 35% during the 2015, early 2016, when they started that rate hike cycle. And during the 70s, I mean, geez. Look what happened to the gold price in the 70s when the Fed tried to get on top of inflation and started raising rates from 4.5% to 20%. The gold price went from $180 to $850. Granted, toward the end of that, a big reason why the gold price ran up so much toward the end of that was Russia invaded Afghanistan. That's another similar situation we got going on here, is the geopolitical situation when we got Russia and Ukraine, and NATO and the US fighting over, NATO wanting to put, being able to put nuclear weapons right near the Russia's border. It's kind of like a Cuban Missile Crisis type situation that Putin says, yet that's not going to happen. We've got very similar situations. That's the last reason why we would want to see the gold price go up. On a geopolitical situation like that heating up, and actual war starting to take place over there. But that is a possibility that we have to think about, because it's not just all the Federal Reserve and the rate hikes that everybody's focusing on right now.
Yeah, certainly a world of $5,000-$10,000 gold might not be a pleasant one to live in here. So I guess given your thesis on rate hikes, give us a forecast in here in the precious metals markets here for 2022.
Well, I mean, I see eventually the gold price reaching 2,000 and exceeding it. And I see the mining stocks. I think there's a real good chance that the mining sector actually bottomed in late September of last year, when we had the GDX and GDXJ make those spike lows on the last day of Q3. And we had a strong reversal from there. And then we had those levels tested once the Federal Reserve announced their tightening cycle in mid-December. And tax loss season wrapped up right then. I mean, let's face it. I mean, I've been in this sector 20 years, and that's the worst tax loss selling season I've ever experienced. I mean, I couldn't believe the deals that were being presented to me over the past few months, and I've loaded the boat. I mean, that's when you need to buy in this sector, when nobody cares about it, when everybody's bearish, when you see liquidity like you're seeing now in these juniors, it's I don't care volumes in a lot of these juniors. I mean, everybody of size, everybody that wanted to sell in size in these higher risk, smaller juniors sold during tax loss selling season, and you just got some retail stragglers selling during the first week last week, and now you're seeing sharp moves higher on lower volume, because it doesn't take much buying when there's no sellers.
Yeah, well, certainly a lot of capital has entered the sector in the last couple of years. A lot of financing is done, a lot of exploration work done. So I guess the question is, did all that exploration work lead to the amount of discoveries it should have, given the amount of capital that was injected into the sector?
the assay results took forever to get from the labs into these companies' hands. That's another reason why we had such a really bad tax loss selling season. I mean, there was no press releases because there was no drill results. So, I mean, when you have no press releases during a bearish environment during tax loss selling season, that's the worst situation you could have, because there's no reason for anybody to buy these stocks. There's every reason for them to sell a press release when it does happen, use it as a liquidity event to sell, because they've got all these huge gains in all these other sectors, and the mining sector has been in the toilet all year, so they're going to sell it no matter how good the stock is. And then they're going to buy it back later if they feel the sector's bottomed. And I think a lot of that's happening right now. A lot of these sector professionals are coming back in and seeing these deals, and they're saying, my God, look how cheap these things are. I'm gonna start getting into them. But we need the retail investor to come in to really get it moving.
So there's no reason right now, in your opinion, I don't want to put words in your mouth, to be on the sidelines right now. I mean, are you?
Well, it all depends on what you want to get into. I mean, as far as what I'm doing is the last few months I've been I slowly got rid of my drill plays, because there's really no reason to be in drill plays that have yet to define a resource. You're taking too much of a risk when there's all these juniors out there that are de-risking high margin projects. They've already got this big project. It's in a safe jurisdiction. They got a great management team with access to capital. They're doing all the right things. And those stocks are being sold with reckless abandon. I mean, why would I take a chance on a drill play when I can get a de-risked large, a junior de-risking a large project for a song? And in some cases, you can even get them cheaper than a lot of these mining professionals bought them for. So that's where the opportunity lies. Sure, that it's the drill plays that catch up last. Once the sector bottoms, it's the drill plays are the last things to move. And sure, you are going to have a few drill plays that are going to make major discoveries, but the chances of getting into one of those are extremely low. So that's what I've been doing for the past few months. I've been getting into these developer explorers that have already proved up these big deposits in these safe jurisdictions. They've got the serially successful management teams that have done this before. They raised money at the right time. They got a great share structure. They got access to capital. They've got serious mine builders behind them and mining financiers, like Ross Beatty or Pierre Lassonde behind them, backing them. And in some cases, you can even get these shares for less than what they paid if you do your due diligence and do your digging, and talk to these companies. And that's always the first question I ask when I talk to these companies. I see Ross Beatty or Pierre Lassonde or whoever's in your company, and they've been providing capital. What's their average cost? And and a lot of times they're trading at even lower than their cost. So when you can get a stock at lower than what these mining legends paid for their shares, that's incredible. And that's the type of situation we have right now. These things are trading at like perpetual warrant prices.
Yeah, certainly a tough sector to manage here on your own here, David. So let's give investors here a little help, a little guidance. Obviously, you're in business for a reason. This is tough to track these things, to really know what you've got there. An investor who maybe doesn't have you at their disposal or somebody, give them a little help here.
Well, that's another great thing about the situation we have right now. Every mining, executive that I've talked to, they're like, this is the slowest it's ever been since 2017. The phone's not ringing. Nobody cares. That's when it's a great time for you, the average Joe, the average retail guy, to send them an email, say, I'm really interested in investing in your company. Could we set up a Zoom chat? And they'll be like, yeah, sure, right away. I got plenty of time to talk to you. Then you ask them all the right questions, and if you don't know all the right questions and you don't know how to choose these stocks, a service like mine, or there's some other newsletters out there that'll teach you how to do that.
Yeah, let's take a step back here and a walk through memory lane, if you will. How did David Erfle become the Junior Miner Junky? Quite the sector we're in here, my friend.
Well, about 20 years ago, well, a little over 20 years ago, my buddies were all making lots of money in the tech sector, just buying all these tech stocks, not really knowing what they were doing. So I figured, hey, if they could do it, I could do it too. So, I took out an equity line of credit from my house and like, hey, I'm going to do this too. And I started buying tech stocks, and lo and behold, it was right before the bubble popped, which was the best thing that ever happened to me. Because, when something like that happens to you and you lose a lot of money, it's a big, huge lesson. And then you start learning from that lesson. And how I learned from that lesson was I started to look for sectors that were doing well, when general equities don't do well. And I came upon the mining sector, and I was fascinated and really got into it. And in 2003, I bought my first gold stock and started to do really well. And then I did something even crazier. I sold my house near the peak of the bubble and put all the money into juniors. Please don't do this at home. And I don't recommend this. I was alone at the time. I had no responsibilities. I didn't have a family to feed. But it changed my life. My stock portfolio tripled. And I learned later that I really didn't know what I was doing. I didn't have to know, because we started a huge bull market, and you could just throw a dart and these juniors and they went up, and I did really, really well. And that's, the rest is history. I made this sector, my focus and my living now. So it's been a wild ride, major ups, major downs. I've lost a lot of money. I've made a lot of money, but the important thing is the money I've lost was well spent, because I learned big, huge lessons that paid off in the future.
Yeah, and of course, you parlayed that into the newsletter and the website. So walk investors through that. How do they follow David Erfle?
Oh, sure. Yeah. I started the newsletter, at the beginning of the bull market back in 2017. And I started writing a column first for Kidco, and they gave me an opportunity to write a weekly column. And then people started, sending me emails saying you should start a newsletter. So I did. And when I started it, I wanted to kind of make it different from the other newsletters, where I'm completely transparent. People get to look at my portfolio. It's a high net worth portfolio, and they see what I buy. They see when I buy it, how much I made, how much I lost. Before I buy something, I do a full detailed report on it, and I send it out to my subscribers a day before I'm going to buy it. So we kind of, we all know about it, and we all kind of get into it at the same time. And it's doing really well. And it's $249 a quarter, and it's $899 a year. And my average realized gain returns since 2016, when I started the portfolio with $475,000, has been 22% per year.
Okay, well, I certainly appreciate you taking the time. Again, that was David Erfle, the Junior Miner Junky. And we're talking StockPulse.com, Inside the Markets. That's our flagship podcast. So if you like this broadcast, please do like it, share it, and please follow us. So David, appreciate you taking the time. We'll look forward to checking back in here maybe next quarter or so, and see how things are going for the precious metal sector.
Always great talking to you, Rob. Thanks a lot for having me on.